Hello, friends. So today we are going to talk about one consumer durable company which has gone up a lot. You can say from 3,000, it has gone to almost 7,800 in last 1 year. And yes, this is the famous company that is the Dixon Technologies. Many of the investors asked for its review, and the review is asked from Shruti and Jayesh and Priyank. These guys have asked for the Dixon review, and today we are going to talk about that in detail. And guys, one thing I want to tell you, this stock has fabulously performed over the years. And if you see in last year, it's one of the biggest multi-bagger stock in consumer durable company. So let us talk that in detail, and we are going to talk about the fundamental of the company, what is the future prospects, and at current valuation, is it justifiable to buy this stock? Because it's touched almost all-time high recently only, and we are going to see each and every nuts and bolts from what decision you have to take from here. So friends, welcome everyone. My name is Sita Doshi and welcome to my YouTube channel. If you're just not subscribed to my channel, click it the below and subscribe it, and any stock you want to review, put it in the comments. I'll review next time. So let us talk about Dixon Technology. So what we'll do first, we'll understand how the stock has performed in last 1 year. So talking about that performance, you see, Dixon Technology from almost 2000, almost 3000, it is currently is around 7,800. It reached the top of almost 7,900. So it has performed extremely well in last 1 year. Of course, if you take the 5 year chart, okay, in between from 2021 to 2023, the stock has not performed overall. No, it was there in the side range between 3,000 and 5,000. But yes, certainly in last 1 year, it has performed extremely well. But as an investor, now is the stock highly valued? Okay, shall you can buy stock or not? This one at this current level, that is what we are going to talk in detail. So when we talk about this company, so first let us understand about the company first. So Dixon, as you know, it's a famous company and it's a largest home grown design focus and solution company engaged in you can say manufacturing products in consumer durables. Also, if you see here, talking about that only, uh, the diversified products includes the consumer electronics, LED TV, washing machine, lighting products like LED TV and all the LED bulbs, CCTV, medical equipments, again mobile and smartphones. Now these are one of the main products. So when we talk about Dixon, is one of the largest LED TV manufacturer in India, and so it's more than 35% of India's requirement. So you can think of such a big stake of these companies there in this region. Again, it is the largest ODM player in lighting and largest capacity in various SKUs. So this company has done extremely well over the years. Again, the business model are two models, namely OEM and ODM. Okay, OEM is nothing but original equipment manufacturer, and ODM is original design manufacturer. And when you talk about the revenue split, consumer electronics is almost 48%, around lighting products is 12%, then home appliance 7%, and mobile is 29%. So the highest is consumer electronics, and second is the mobile and EMS, which is 29%. Production capacity is 5.5 million units per annum. Okay, for consumer electronics. Okay, and rest for lighting lighting products also, they have a big unit. Now, when we talk about this company, it is in an expansion mode. So, expanding annual production capacity of LED to 6 million sets. Okay, and that is when they are focusing a lot on LED and also talking about the mobile phones. Okay, they've done a capex of almost 417 crores in financial year 22. Now let us talk about the PLI scheme. So PLI scheme plays a very big role for this type of company. So companies receive 5 approvals under the PLI scheme of Government of India, including mobile, telecom, networking, and products, IT hardware, and air condition, LED lighting. Now this is where they are getting a lot of, you can send approval, and also no, this is where they're boosting their sales also. Okay, again they are falling into various markets. So now let us this is just about the company. Now let us understand now what is the outlook and the performance and what is the future prospect of the company. Then we'll talk about the various ratios. So talking about that, if you see here, uh, Dixon Technology has acquired Ismar to manufacturing unit of Transient Holding. Okay, at an attractive valuation, helping company further expansion in the domestic smartphone market. So on the smartphone area, they've done an acquisition Ismar to, and that is one of a very very attractive valuation they've acquired, and which is going to enhance their capacity. Again, Transient has a 8.6% share in the domestic smartphone market and 20% share in the feature phone market through three brand Itel, Techno, and Infinix. So this is what no, they have a very good almost 8.6 share in the domestic smartphone markets, and this is what one of the subsidiary they've acquired. Again, recent tie-up with Ismartu and Compel has potential to increase the export share over the medium term. So the recent acquisition, what the Dixon has done, will expand their export capacity also. Again, BBK Group, which is another big group, is also keen to partnering with local contract manufacturers such as Dixon to expand domestic manufacturing capacities. So basically what is there in the BBQ portfolio? So that is Oppo, Vivo, Realme, OnePlus, and IQOO. Now these are some of the famous brand, and they have a combined market share of 45% plus in India. Okay, so talking the total group revenue in India is almost 819 billion. Okay, so 81,900 crore rupees is their total turnover. Now, if they are going to tie up with Dixon, that is a big, big positive for Dixon Technology. Also, Dixon ability to capture volumes of BBB group and further expand its market share in the domestic mobile manufacturing remain the key catalyst for the company. So, how this joint venture is going to be, and of course, when it is going to come in shape and when it will be in operation will play a big role. But yes, if the Dixon Technology is able to get this, you can say that joint venture, I think that will be a big catalyst. Dixon has also agreed to undertake manufacturing of mobile phones of Compel and designate customer for the domestic Indian market. So with the Compel also, they are going to do a tie-up. Again, the management is confident about the healthy revenue growth led by increasing mobile segment demand. So as the demand of mobile is always there, new product launches and new customer additions and all that. And it is very tough market to get in. No, once you are getting, once you have a good base, no. And if you do this type of collaboration, because a foreign company will come in, they want a local manufacturer and they want to tie up with the local manufacturer. And this is where the company gets benefited. Again, the mobile EMS segment, the company has annual capacity of 30 million smartphones and 50 million feature phone across its four plants in Noida. Their major capacity is there in Noida. Okay, the company in last 9 months has already reached a milestone of 11 million smartphones and 26 million feature phones produced in India level only. So, as I told you, a foreign company will come, they want to collaborate with this type of company which have a good capacity and no, they can ramp up the production very fast. Also, outsourcing opportunity mobile sourcing is around 85 to 90 million of the 150 million market share. So there is a big outsourcing no opportunity in mobile division. Management expect to capture 35 to 40% of outsourcing. Now, this is when the most of the manufacturer may not have that type of capacity to build up everything. No? So they give a contract manufacturing to the local manufacturer. And this is where the Dixon technology will be benefited. Again, consumer electronic, the company entered into partnership with Samsung to the Tizen operating system. And that is also in consumer, consumer electronics is almost 48% of the revenue. So that is also there also they have partnership with the Samsung and which will help there to ramp up the, you can say inventory over the time. But yes, last quarter was not so, the demand was not so great, but yes, in future it will be good. Okay, again, the what are the various key risks with the company? The delay in capacity addition may postpone the growth in the mobile segment. So, as I told you, the demand is big, but whether they are ramp up the capacity or not, that is the thing to be seen. But yes, if any delay in then there is a problem. Again, slower growth in the consumer electronics and lighting product segment due to a slow peak in the consumer sentiment. Now, this is when overall, if you see consumer electronic lighting division is not doing as it should do. Okay, and as a result, there is a little bit of no demand sluggishness coming from that segment. But overall, I think if the demand is really getting normal for these two areas, that is consumer electronics and the lighting products, I think things will be much, much better for Dixon. Again, volatility in the raw material prices may impact the profitability. So, of course, volatility, the raw material prices, which you know that most of the, you can say that overall the metals are up and all that. So, this is also one of the key risks for this company. But when we talk about the EBITDA margin, no, if you see here, the consumer electronics having a 3.3%, lighting products is having 8.6%, home appliance 10.9, mobile is 3.2, and security system 3.8. So home appliance is having the maximum, you can say, EBITDA margin. Overall, the EBITDA margin is around 4%. So this is all about the company. Now let us talk about the, you can say, the financials and all that, and we just spoken about the outlook. So when we talk about the ratios, okay, let us understand the first the quarterly result. So if you see this quarterly result, last two quarters, it has done very well from, you can say, the September 23 to, you can say, December 20. You can see the actually profit was falling down to almost 67 crores, which has gone up to almost double in September. And then December also is shown a good growth. Okay, overall, the you can say the revenue is also getting picking up. Okay, operating margin, as we talked about, it is around 4%. Okay, now, when we talk about the year to year, you see here, this company is extremely done well. In March 13, before that, March 12, it was on minus 7 crore profit. Over this, the company has performed well and it has gone to 120, 160, 190. Now, March 20 was 255. And this year, already it is achieved 358 and still one quarter to go. No, but this is the TTM, so last 12 months average is showing. But yes, it may be around 300, 350 crores, which is a very good. So when we talk about the component sales growth, in last 10 years, 32 years, 32%, compounding profit growth 54%. And if you talk about last 5 years, it is given 75% CAGR return. Now, this is how the big this multi-bagger it is. Dixon has performed extremely well, and over the last 1 year, it has gone up by 162%. If you see ROE and all that, no, that is also good, 23%. So let us talk about the various ratios. So 22% ROE, 24% ROCE. Okay, so we already seen the sales growth and the profit growth, which is very good. Okay, overall, everything is good about the company. Even the future prospects also look promising. Then where is the problem is coming? The problem is coming here. That is P ratio, 133%. Of course, industry P is also on a higher side, but 133 is quite high. So the problem lies here. If you see the P ratio, you see the P ratio gone up to almost, you can say, extraordinary 182%. Then it has fallen to almost 16. You can say that 68, 69%, almost half, not half, usse bhi zyada kam, almost one third. But after that, again, it has gone up and it has gone to almost 132. Why? Because you see the steady increase in the profitability. So if you see any ratio of this company, no, you will feel, it is quite on a higher side. Valuation is on a higher side. If you take price to book value also, it is no, which is extraordinary 32 times. And one time it reached to almost 49 times. What I'm trying to convey here is that, guys, the I am not saying the company is bad. Company is very good. Okay, if we do start analyzing whether we should buy this company or not, the only problem we have to ensure here that is the valuation has gone up too much. Okay, because at the end of the day, you can earn money only when you are having a stock at a proper valuation, and that is what you have to understand here. That Are you buying a stock at a proper valuation now? Because if the stock is extraordinarily high and the P is so high, then the growth should be so fast to capture that valuation, rich valuation. If it is not able to capture it, then again there is a big problem. So this is what the concern lies with, the where P ratio is quite high and it is quite richly valued, and it should, because the way it is performed. But as a investor, as a value investor, should you buy this company or not? That is the main question you have to ask yourself, because the valuation looks far, far ahead. So, guys, this is what my take is. If you are already invested in this stock and if you are still holding, very good. Congratulations for your good profitability. Keep a stop loss in your mind, and go with this stock. However, if you are want to buy a stock, I think you should think about it and then only take a decision. Again, all these thing, guys, is just a you can say suggestion from my side, no recommendation. No doubt, I am a SEBI registered research analyst. I cannot give you like this. Okay, so do your own analysis before investing. I just wanted to give you the main points which you need to see for the Dixon technology. So hope you like this video and hope everyone who wanted to know about Dixon may got lot of value out of this. If you liked it, do like this video and do share it as many possible, and do subscribe our video, and also put in the comment box if you want any stock from my side to be analyzed next time. So I'll see you soon next time. Thank you.